In today's episode, we're going to be talking about three things. Is gold a savings vehicle or an investment vehicle? How much you should own, and also, if you want to, where you can get some.
Enjoy the episode.
Take care. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host, Anthony Faso. We often get asked questions about gold and what our experience has been. And so today, we're going to share that with you. So, Anthony, let's get started. Yeah, Anthony, what is, if we're looking at gold, and let's start with our kind of perspective as gold as an investment vehicle. What are your thoughts there?
Well, for us, what we have a criteria in analyzing assets, and we call it the hierarchy of wealth. And in that, we look for assets that meet three categories: certainty, collateral, and control. Now, with gold, we don't have certainty, right? We have very limited control of it, but we do have collateral. So for us, that is a tier 3 asset. And really, we want to work our way up. So I wouldn't really look at a tier 3 until we max out tier 1 and tier 2. So, but even if you are looking at a tier 3 asset, if we dive a little closer to gold and the attributes, typically gold is known as a hedge of inflation. So it's going to rise and decline in relation to inflation, which there's some advantages to that, having that as an asset. But I mean, there's some other assets or investments that I would rather have than just keeping up with inflation. What are your thoughts, Cam?
I agree. And I really like the point that you made there, is that from our point of view, is there are other things, right? It's tier 3 for us. If you guys haven't listened to us or aren't familiar with the hierarchy of wealth, we've done an episode on that. I'll put that in the show notes, but take some time to go back and listen to it. We dive in depth on some of the characteristics that identify or classify each of those categories. But Anthony, really good point on there that, hey, we've got several other opportunities before we get to gold that we should be looking at and considering. But I agree with you. Gold as an investment is not something that I would be interested in. And I say that from personal experience. This is going back probably 15 or more years now, 16 years, is that I was pretty young and I was looking for investments. I was doing reading and researching at the time, and it was talking about how the dollar was becoming devalued and you got to get out of it, and it was recommending kind of hard assets. And so I didn't have a lot of money, right? So I actually preferred silver at the time over to gold. And so what I bought is I bought a whole bunch of silver eagles, Anthony, and they had them in sets where they print silver eagles off every single year. And so I started buying those, and I had several different sets that I had acquired and some one-offs here and there just for additional value. But, man, I was a big fan of it for a long time.
And till you said for a long time, and not like still.
And then, I was gonna say, and then one day I wasn't. And really, what it came down to for me was it became very illiquid, right? As I had it for probably a period of maybe 5 or 6 years, and I had substantial amounts of holdings in silver, and it was not. It wasn't, I don't know, right? I would look at opportunities and I would see different opportunities. And for me, I had too much of it in silver. And so over that course of period, I ended up just selling it at the end, and I ended up having cash and moved on to other things. So, there was a point in time where I was a big fan of it, but at this point, and since then, I'm really not. I'm not a big fan of the illiquidity of it.
Okay.
Yeah. But I'll tell you what is... So that's kind of, I like you'd mentioned, is I had approached it, right, if I were to frame it accordingly, is that I had approached silver at that point instead of gold as an investment vehicle, and that was a mistake, right? But I do think that there's certainly a place to use silver and or specifically gold as a savings vehicle. Anthony, what were your thoughts on that?
Well, just like we talked about, one of the reasons why we don't like it as an investment, because it's typically a hedge of inflation, which, you know what? We look at our savings. Like, what are some attributes we want of our savings, right? We want it ideally to be safe, liquid, and going to at least increase with inflation. So that's where gold or silver, I think, could be an important part of your savings plan.
Yeah.
right? And so we're just so if you have, say, 1 month of living expenses and inflation goes up, typically those gold coins are still going to buy 1 month of expenses. So it's a great way to have some safe savings, and it's going to always go up. It's going to maintain its value in relation to its buying power.
Well said. Well said. And I agree with you there. Is if you look at somebody's portfolio and you're looking at kind of what they have available to you, and somebody has a store of cash, I could absolutely see having a portion of that cash being stored as gold, right? Because it does act as that hedge. So, yeah, there's certainly a place for it.
And I know we are big on having, I don't like to use the word emergency fund.
Yeah, opportunity fund.
It's too negative, right? Either a reserve fund or opportunity fund, like that. That sounds powerful. Like that sounds like an abundant mindset. And we often get asked, like, what are we doing? And we're an open book. We'll explain what we're doing with our policies and our investments. And personally, what I do is I keep 1 month of living expenses in my savings account. I can get access to it like that. I can transfer it on my phone. But then I'm keeping, ideally, I'm going to have 1 month of expenses in gold, in a secure safe. So it's not just one of those small, good-looking ones that just sit on your shelf that somebody could easily take. Like, it's got to be bolted down in there. And I also have cash at the house, and I even forgot about it.
Did you really?
Yeah, because, well, that was my goal. Yeah. Like, I just wanted, originally I had the cash because I had teenagers, and you never know if you need some bail money, right? So I had some cash, but what I did, before we didn't have a safe, I'd kind of hid it strategically. In some jeans, like I'm sure no thief would ever find it.
Yeah.
But when we finally got a safe, I went and put it in there, and I totally forgot about it, but my wife didn't. Because sometimes we need to give, have some cash for people working around the house, and she started digging into our cash.
Yeah.
And I'm like, babe, that money's not even there.
Yeah.
So now what I've done is I put tape all around it, and I wrote "no touchy" on it. You can laugh, but it works. She's not touching it.
Yeah.
But I still want to have more part of my emergency fund.
Yeah.
And so when I'm looking at it again, I want my I even said emergency fund.
You did, yeah.
Right? So it shows you how kind of things get ingrained in you, and it's hard to get out. But I do want to have, personally, I want to have a large opportunity fund. And when I look at it for that money, again, I want it to be liquid, and I want it to be safe and keeping up with inflation. Can you think of another financial tool that does that, Cameron?
Yes, I can. Yeah. It'd be my policies.
Yeah. So I'm going to and also in most states, or every state has some level of asset protection.
Mm-hmm.
So I don't want to keep too much money at my house or in a bank. Anything more than that, I'm going to put it into a policy. And the key thing is I have to somehow wrap a figurative tape and no touchy on it, that to know that, well, I can't buy a rental house with it, or I can't do something with it. Like that is earmarked for reserves and for a opportunity. But I will say, since we were talking about prepping for this, I don't know, I kind of feel like I have more cash in my, I don't think I need a whole month in cash at my bank. Now I have a LELOC, a life equity line of credit.
Yeah.
I could write a check and put it in my account now. So I don't know. You actually got me thinking, Cameron.
Well, it is a good conversation. You got me thinking, right? Is that I actually keep 2 months' expenses in our checking and savings, and that's just personal preference, right? There's really no rhyme or reason to it other than I just like to see that number in there. But what I was surprised in doing research for this is the amount, right? You always look at some of the recommendations that is typically made out there in our industry. And, man, one of the things that jumped out at me was there's a lot of recommendations for somebody having as much gold on as the percentage of gold of having 6 to 18 months of living expenses in gold. That one blew me away.
Well, and share where we got that.
Well, we got it from Nelson Nash's website, and one of the things that Carlos Lara and Robert Murphy had put out is how to weather the coming storm, and I have the utmost respect for the both of them and also the Institute, but man, that was one statistic or one number or recommendation that, man, it just jumped out at me. It blew me away, right? Is based upon the experience that I had and the kind of illiquidity of it, man, I don't know.
Like to me, 18 months, and I don't depends what your overhead is, but I mean, for most people, that's probably $100,000.
Yeah.
And for me, where would I rather have 100,000 in gold in my safe or inside my policy? Now I have a death benefit. I mean, there's a lot of intangibles and benefits of having it inside a policy.
So let me extend that, or let me kind of maybe explain that a little bit more. The video that I was watching, the recommendations that they were making was how to weather the coming financial storm. I'll put a link. We can put a link in the show notes. Great video. It's an hour long. These guys do a great job of just kind of presenting some of the problems that are arising in the economy. But what they were talking about, Anthony, is that, the market's going to collapse, right? Maybe banking institutions also collapse. And I was going to ask you, right, maybe they're looking at it a little bit different. Maybe their vision is a little bit different moving forward. And some people do approach us and say, hey, what do you think if, I don't know how you classify it, financial ruin, if the banking institutions were actually to go under or to stop, then does your view on gold change at all? What are your thoughts there?
Now, I'll be upfront, this could be that I'm naive. Which I've been called that many times.
Which is a very high likelihood, yes.
I can't fathom not having a banking system. Mm-hmm. And again, maybe I'm just too short-minded, but the way that I see with technology, with how much money flows through and having a free market, if this system were to somehow crash, I can't imagine another system coming in and taking its place.
I've been asked that question over the years, and again, I agree with you. And I don't know if maybe I just don't have that vision, but I always kind of look at it as a spectrum, and that's kind of one end of the spectrum is this thing, banking institutions going under, which it could happen, but man, if I go there and I put myself in that mindset, for me, the priority becomes food and water, and how do I get that? It's either on a kind of a friendly basis, I'm going to barter, or it's an unfriendly basis, and I better have a bigger gun or more bullets than my neighbor. And so, I don't think gold and or even paper money in that situation is really going to come into play. That's my opinion.
And I agree. If we're talking the worst case scenario, the main priority, food, water, and bullets. Right, and that's going to, I think that's going to be more important than having $100,000 in gold.
Yeah,
is having a lot of bullets.
Yeah, absolutely.
And when we're sharing this, and we talked about what's the right number to have in your opportunity fund or your bank. You know what? To me, I think it's important to have 6 months to a year in expenses. Mm-hmm. Where you put it, I think it's where you feel comfortable with. I know some clients that she wants to have $100,000 in her bank account at all times, and if it goes below there, she gets nervous.
Yeah.
So for her number's $100,000.
Yeah.
Right. But some other people, maybe it's much less. But how you allocate it, I don't think is nearly as important as that you do have it.
Mm-hmm. Yeah. Great point. And, if we were to summarize this and kind of wrap it up, I would say...
Well, one thing we got to talk about is...
What else you got?
Well, the third thing is if you want to get gold, how do you get it?
Yeah.
Right. And there's a few ways. One would be to go to a coin dealer in your area, which there's some pros and cons to that. I mean, they're not known to be, all of them have high ethics. So you got to be very knowledgeable on what you're doing. Where I bought mine is on a website. SD Bullion. We're going to put that in the show notes. What we're also going to do is did this about a 15-minute video that I think does a good job of, if you want to buy gold coins, what's the coin to start, and it talks about some different. It talks about the American Eagle. And those actually come in different denominations. You can buy like 1 ounce or 1/4 and 1/10. And I will tell you, I bought a little bit of each because I was thinking, for one, I do want maybe have to, if I do need to barter with this, I'd rather have some small denominations. But the crazy, again, this is I didn't fully understand, but I bought like 1/10 of an ounce. It's like a penny. Like, it's smaller than a penny. I looked at it, and this thing's worth $200. But I thought, you know what, I could easily lose this.
Yeah,
I'm not going to know. So what I'm going to do is I'm going to buy some silver, and then that'll be small denominations, so I could barter or exchange. Because if you give somebody 1 ounce of gold, I mean, they may not have change. Right,
and they may have a gun and just keep it. You come over to my house and barter at that time. We'll just take that whole thing.
So we will put this video in there that explains of how those gold coins, how the prices are, different places to buy it, and also ways to store it.
Yeah, great point. Right? So now let's summarize kind of our 3 points that we're talking about. Number 1 was, hey, we want to make sure that you guys understand or differentiate the difference between viewing gold as a savings opportunity and or an investment vehicle. We're not big fans of investment vehicle. Savings opportunity, there's absolutely a place for that. The second part was, how much you should have. Personal preference, right, would be my opinion, right? It wholly depends on kind of what you're trying to get accomplished and what you're comfortable with. And then the third place is, where can you get it, right? You can obviously find a local coin shop, but we're going to make some recommendations, at least share a couple websites that we know to be reputable. We're not getting paid in any way. We're just kind of making it available for you guys if you have any interest. So,
well, speaking of interest, if somebody was interested in learning more about gold and like why is gold the standard for currency, the best place I saw was actually another book by Nelson Nash and Carlos Lara and Robert Murphy called How Privatizing Banking Works. The last couple of sections talk about infinite banking, but the middle one starts talking about money and the money supply and kind of the history of it. I thought that was very interesting. So if you want to learn more about the history of gold and money in a condensed way, and maybe learn a little bit more about infinite banking, I would check out Nelson's book, How Privatized Banking Really Works. And we'll have a link in the show notes for that as well.
Awesome. Well said. Hope you guys enjoyed the episode.
Make it a fantastic day.
Take care.